Good morning, all, and welcome to another edition of Let's Talk About It, our program dedicated to discussing the most relevant financial and economic news impacting investment markets. I'm Holly Madasser, and today I'm joined by PJ Williams, our Co-Chief Investment Officer here at Stearns, and Stephanie Link, Chief Investment Officer and Portfolio Manager for Hightower Advisors. For those of you who don't know Stephanie, she's an industry veteran. Among her various roles, she spent over a decade at the Street working with Jim Cramer. However, you in our audience probably know Stephanie best from her regular appearances on CNBC. Stephanie, we are honored to have you here today for part 2 of your appearance on our show. PJ, I know you have some burning questions for Stephanie, so why don't you take it away?
Thanks, Holly, and Stephanie, definitely appreciate you taking some time this morning with us. You know, we've all seen a number of reports coming in about supply chain issues around the world across many industries. We know our clients are feeling this, whether you're building a house, buying a new car, or even shopping at your local big box store. And one interesting article I read this week from Bloomberg talked about IKEA now chartering vessels to try to keep the stocks full from Germany to the US. And so we wanted to know if you could just speak to what is causing this and really thinking about how is this going to impact prices in the economy over the coming quarters.
Well, thank you both for having me. And I just want to tell the audience that I don't normally hang out at a bar 11 o'clock in the morning, but I am at our CEO's restaurant called Reckless in New Hampshire because we just had a 3-day retreat with the executive committee. So I apologize for the background and I apologize for the noise, but I would be in my office if I could be. So it's a pleasure
to know that it's not our show that's driven you to a bar this morning.
Absolutely not. I'm delighted to be here. This is great. It's a great time to talk about the supply chains issues and inflation. We just got a very, very strong PPI, Producer Price Index report this morning, where it showed 8.3% annualized year-over-year growth in inflation, in producer prices out there. So it's definitely a topic. We as investors, all three of us are thinking about this. All portfolio managers, my entire team within Investment Solutions, and so this is the hot question. We do have inflation, and the Fed believes, though, that inflation, for the most part, is transitory, meaning temporary. I think that there are parts of inflation that are transitory for sure, but there are parts that are much stickier. And I step back and I say, okay, if I think some parts of the commodity complex, which is really the transitory piece, if that eventually resolves itself, that should be a good sign, but it's not really resolving itself. I'm looking at on a 2-year-over-year basis, right? Soybeans, for example, are up 36%. Corn is up 25%. Copper up 66%. You get my point. Commodities are, even though they're down from their highs, they are still up significantly over the last 2 years. The other question I have about transitory is, how long is transitory? What does it even mean? Is it 3 months? Is it 3 years? I tend to think there's so many bottlenecks in the system, PJ, you mentioned the supply chain issues, that it's going to take a while to fix. The other piece that is not transitory are wages, which are up 4.3% annualized in the most recent jobs report, and shelter costs as the eviction moratoriums get lifted, right? So you're starting to see shelter costs go on the rise. So I put it all together and I say, we definitely have inflation in the system. Some is temporary, some is not. And oh, by the way, I'm happy that we're getting wage increases. That's great for the consumer. That's what we're rooting for. But we just don't want runaway inflation, because from a profitability point of view, and from a corporate point of view, from a stock market point of view, you have to worry about getting pinched in terms of margins as they have to pay higher wages. One interesting thing to note, and I know Holly and PJ, you've seen this, we got a job openings, what they call JOLTS. It's just job openings around the country. Almost 11 million job openings out there. And the person, the economist that works at JOLTS, I always like to listen. He's an economist, so I like to listen to what he has to say. And he said, you know, that even people can't get workers, number one. And number two, if they do get the workers, they have to actually increase their wages, even more so than they already have. Again, good for the consumer. And why do we care about the consumer? Well, we are all consumers, number one, but number two, it's 70% of US GDP. So it's a nice tailwind for the consumer, and the consumer, they have been diligent in savings. The savings rate right now is 10%, a little under 10%. Historical average is about 5%. If we were to get back to that 5% number, that's almost $1 trillion in pent up demand. And I don't know about you guys, I'm pretty sure, I'm probably speaking for all of us, there's a lot of pent up demand. And it's going to be more on the services side. We want to go to restaurants. I think we want to go to movie theaters eventually. We want to go and travel eventually when we know it's safe to do so. So all of these things are interconnected. I do not think that inflation is going to be runaway, but I do think inflation is going to be above trend. Why I don't think it's runaway? Because we have productivity in the system, and that helps to act as a governor, if you will, against rampant inflation. That's not to say pockets of the economy won't see double-digit kinds of inflation. I mean, I just said, I gave you all those commodity price increases and the percentages, and I just don't see that really changing materially in the near term. PJ, you asked, why are we having these supply chain issues? Because we shut the country down and the world down 18 months ago, right? And when you shut everything down completely to restart it, that again, it's all about that pent up demand. And at the same time, you have ports that have been closed again because of the pandemic. And then with Delta, that is only exacerbating the whole situation because there's so many unknowns, and China shuts their ports, we shut our ports, and then things there are bottlenecks. And then one last thing I would say is I've talked to a number of semiconductor companies because we're seeing shortages there too. And what the companies have said is that, well, we're running 100% capacity. That's all we can do. We can't run more than 100%. So to build another facility, it takes 2 to 3 years. So that's what we're starting to see. In fact, there's this company, Lam Research, it's a semiconductor equipment company, just yesterday said they're going to build a new facility. But again, and they're building the new facility to keep up with demand, but again, it's because of the time lag. It's not going to be ready for 2 or 3 years. So I think we have to step back and say some parts of inflation are transitory. The other part of it is, and I always kind of look at the glass half full. The other part of inflation, in addition to supply chain issues and to all the money supply that has been put into the system, I really believe strongly that the economy is growing above trend. So inflation is rising because we're growing a little bit faster. So putting it all together, you just have to kind of keep it in mind, and hopefully we can get through this in the shorter term. But my hunch is we have to wait a couple of years.
So Stephanie, just following up on that and talking to my clients, a couple of questions. One is, now that the unemployment benefits have kind of been pulled back a little bit, how do you think that will impact this huge job openings and not enough employees and paying bonuses to people just to get them to stay at work for a week? What do you think that's going to do?
I think that is a great question, because it is the number one question. We're all kind of wondering what September, what October is going to look like, what November is going to look like. I do not think we're going to fill those 11 million job openings, number one. And number two, I don't think we're going to go back to where we were in terms of what people were doing before the pandemic. I think you're going to have there's a subset that they don't want to work, or they're retiring early, or they were thinking about retiring anyway. So there's a lot to that, and it's very hard to quantify what the kind of demand is going to be for jobs. But I will say that with all these job openings out there and people kind of reluctant to be so quick to go back, especially because they have a 10% savings rate, they've built a little bit of a cushion, so they have some time. Maybe they built a big enough cushion so that they don't ever have to work again. I hope that's
Or-
the case
or-
with them.
or they're starting their own businesses, or they're
Yes.
consulting. I think the pandemic has really caused a reinvention or a rethinking of the way people work and live. And so some of it might be that.
Some of it might be back. I expect some of it to be back. I don't expect it to be pre-pandemic back. And so therefore, if that's the case, then you're going to have, as companies and employers, they're going to have to pay. They're going to have to increase their wages.
Yeah.
I'm sitting here in a wonderful little town in New Hampshire in a bar, and our CEO said he can't find a dishwasher. He can't find someone to run the bar. He can't find a lot of different parts of his business that's essential. So he's doing a lot of these things, right? So it's sort of interesting. And I'm sure anecdotally, you guys have the same experiences. I know I do as well. And we're rooting for businesses to come back, particularly small, medium-sized businesses. But I think it's just going to be a struggle for a period of time.
Yeah, absolutely. So one other question related to inflation, and this is again something that some of my clients are really worried about, is the nation's debt. How does putting so much money into the economy impact? And I mean, you would think it devalues the dollar, it causes higher inflation. Is that part of the equation right now, or do you think it's mostly supply chain issues?
I think it's better than expected GDP growth, a bit above trend GDP growth. I think it's all of this excessive liquidity, both monetary and fiscal policies put in place. I think, and then you have the supply chain issues. Those are the reasons right now that I believe are leading to inflation. I think the debt issue is a very important one, and we're about to just pass an infrastructure package for another couple of $1 trillion. So I think, number one, it's something that I worry about, but I don't worry about it in the short term. I almost worry about it, Holly, for my 14-year-old, because I feel like she, down the road, many years down, as they kick the can, I think that group, that cohort, are going to be the ones that are going to have to pay for it, unfortunately. In the meantime, we're going to see a lot higher taxes across the board. We're going to get some details on that, by the way, on Monday. So we'll keep an eye on that. But I don't think it's that the debt issue right now is leading to inflation, especially with interest rates so low. It will cause inflation. It will weaken our dollar. But I don't think it's a short-term thing. I think it's maybe more medium and longer-term thing that we'll have to deal with.
Yeah, sometime the rubber is going to meet the road, right?
Oh yes, there's no question about that.
Well, so this next question, and really PJ should be asking it because his wife is a doctor, and this is something he's like really focused on, is the Delta variant and the surge. And I'm sure you saw yesterday Biden's new mandate on companies that have over 100 employees having to have either vaccinations or weekly testing. Tell us what you think about the Delta variant. Many companies I know have lowered their Q3 GDP forecast, growth forecast. How do you see this playing out in Q4 and the first half of 2022?
Yes, I mean, and it's just so sad, right? We thought we would be past all of this right now. Unfortunately, we're not, so we have to deal with it. So I step back and I say, if I look at the GDP number, from the beginning of the year, I had always thought it was going to be front end loaded. What does that even mean? That means stronger growth in the first half of the year and then slowing growth in the second half of the year. Again, we've had enormous liquidity in the system. We have lower interest rates. We have a Fed that's super, super accommodative. So all of those things have led to about 8-9% GDP growth for this year. I had always thought next year was going to be a tougher year because you have less stimulus. You probably have a Fed that's going to start tapering and maybe even raising rates, and that will slow growth overall, plus very tough comparisons. That doesn't change, and the second quarter in particular is the quarter that I thought was going to be peak growth. So everyone is obsessed about, okay, we had peak growth and we had really, really strong growth, and we're going to have this year, and it's going to decelerate. The debate is right now is do we go from 8-9% to 3-4%, which is above trend. Trend is about 2. Or do we go back to trend? And that has been the hot debate, the hot topic this year. I strongly believe that the Fed, even if I think they're behind the curve in terms of starting to taper and then raise rates, I still believe we have a very accommodative Fed and still enormous amount of liquidity in the system. And the Delta variant and the cases are going to keep them on the sidelines for the time being. And I think that in itself will continue to lead to, again, above trend growth, above trend inflation. But that's what the concern is in the marketplace. This peak growth, where does it settle out at, and what does it do to earnings? Because that's what we care about from an investor point of view. From an equity investor point of view, we care about what earnings are going to do. And they were up last quarter, the second quarter, they were up 85% year over year, which is crazy. I mean, it's just really, really amazing, easy comparisons. So that is going to also start to decelerate. And so that's why you've actually seen a little bit more of a defensive tilt in the marketplace. What does that even mean? That means large cap secular growth has been outperforming. Some of like the healthcare sectors, within the healthcare sector, they've been outperforming. Some of the utilities and REITs. So more defensive kinds of stocks and sectors have been working since about May. For the first part of the year, from January to May, we were all excited about growth and you wanted to own cyclicals. That changed when the data started to decelerate. Again, I believe very strongly that you're going to continue to see better growth next year, better than trend. And so I still want to have what I call a barbell in terms of what I own. And so that's some of these secular growth technology and secular growth healthcare companies, very exciting. The total addressable markets are incredible. And you want to have exposure there for sure. That cohort is not cheap, however, and it's very, very over-owned. So I want to barbell it and offset it, meaning with some cyclical names, meaning some financials and industrials and energy, because those stocks have actually, and those sectors have actually lagged materially since May. And I think there's real value. And I also want to own reopen names. That perhaps is the best value out there in my mind, because people are nervous. They don't think we're going to reopen. And it goes back to how bad is the Delta variant and how bad are the cases. Now, I am not an expert by any means on Delta, COVID, or any of that, but I look at the numbers on a week-to-week basis, and the numbers seem to have peaked. And then, of course, with President Biden issuing that order yesterday, in terms of having to be vaccinated if you want to go back to work, I'm hopeful that people will listen and that will also help the cases and the case load. So it's something to watch. As an investor, I kind of look at it and try to balance a portfolio from a consumer point of view. It's just sad, but we have to deal with what we've been dealt with and given. And so that's what we're trying to do, just, balance it all out.
Yeah, agree with you that it's very sad, and kind of thought we would be over this by now. I know, PJ, you've got some strong feelings on this coming from the medical community and your wife's work.
Yeah, and to echo Stephanie, we do hope that with the most recent numbers that there may have been a peak, and that we're for this wave at least on the downward trend. Again, we saw that quickly in the UK and other places that experienced Delta before us. Once they turned the corner and hit that inflection point, that cases did drop significantly very fast. So we hope that we see that here in this country. Maybe what Biden's plan yesterday announced, it's going to take weeks, if not months, to put into action. So it might not help much with this wave, but hopefully it can help control potential future waves. And Stephanie, you spoke a lot just now, or you began to reference the Federal Reserve. And we know that the Federal Reserve, really going back to the financial crisis, has been a much bigger player, or at least in the everyday investor's mind. They are well aware of the Fed and what they're doing. We saw back in late 2018, they may have pushed it a little far with raising Fed funds rate. The market did not like that with our significant pullback during that quarter. We saw last March when they threw everything they had
It's a great question, PJ, and we're all trying to kind of figure this part of the puzzle out, right? So first and foremost, I think the Fed will remain accommodative for longer, because I think that there are just too many question marks right now. We just mentioned, we talked about Delta. We talked about inflation and how they see it as transitory. And I may not agree, and you may not agree, but they think that's their policy, and that's the way that's the way they feel. And I will say this: we've had a number of Fed governors in the last several weeks talk about how they should taper because the economy is on the mend. It's really Chairman Powell that's going to make that decision. So while it's a collective group, he's the one that's making a decision. And if you listen to what he says, and he has most recently said that they are going to stay very much accommodative for longer. Now, let's step back and just discuss why have all these Fed governors, why I actually think they should taper sooner rather than later. And that's because we do have an economy that is growing way above trend, 8-9% for now. And we have inflation, and I don't think it's transitory. Well, if let's just say they decide in November, December, they get comfortable with what Delta is giving us, maybe we have seen a real drop off in the cases, and they say, okay, we're going to start to taper sometime in, I don't know, is it December? Is it first quarter? Most likely it's going to be first quarter, I believe, of 2022. That's different than raising rates, right? That's just starting to take their foot off the gas. They're buying $120 billion a month in QE. In bonds and all kinds of assets. So if they start to taper, you're talking about taking 10 billion off the gas, right? If you go from 120 to 110, you go to 120 to 100. It's still extremely accommodative, is my point. When they feel confident enough to start to raise rates, that's usually when the market starts to struggle in terms of equities. I would also believe the bond market starts to struggle, even though I've been wrong on the bond market and yields. I thought that yields would be closer to 2%, just given the growth that we have, 2% on the 10-year, just given the growth that we have in the economy. But you have such distortions happening in the bond market because they're buying so much every month. And by the way, so is the BOJ. So is the ECB. So there's so much distortion out there right now. It's hard to get your hands around why yields are where they are when we have growth of where it is. So I think at the end of the day, though, taper is not, we shouldn't see a tantrum, right? A taper tantrum in the markets. I think also because they've done a great job at explaining the whole situation and communicating to the world. All of the central bankers have been overly communicating about what they want to do with policy. So, and one last thing I would say is we should embrace taper. We should, if they think the economy is on the mend and they don't need to have emergency policies in place, then we should be excited about that, because that means that we really truly are on the mend and the economy can handle it. So I think we have a long runway here before we get to raising rates. And in the meantime, taper should be something that we say, I think it's a smart thing to do, because we don't want the Fed to be behind the curve in terms of, being too late to be taking action, because that's when you're going to see more inflation, in my mind, if they decide to wait much longer than sometime in the first quarter.
That's great. And Stephanie, we have a question from our audience that might actually drive you to drink. And the question is that Biden's new mandate will probably be aggressively challenged in the courts, which would definitely delay implementation and could cause the entire recovery that we're talking about to slow down. So what is your take on that?
Yeah, I mean, I don't disagree with you're going to have challenges, right? I really don't disagree at all. I'm not an expert on that, but I would simply say that let's watch the cases. I think the one thing about the Delta cases, when they started to really rise, you did see an increase in vaccination rates in general without this mandate, right? So I think that people are taking more caution. I think people are a little bit more nervous. I think that those people that were on the fence on vaccinations are getting the vaccinations. There are certainly a pocket of consumers and of folks that just won't ever take it. And I get that. I understand that. But hopefully we get herd immunity, by the way. And the other part is that I hope that maybe we will be able to just act a little bit more carefully. I think that we were in Nashville, for example, a couple of weeks ago. It was a mob scene. No one was wearing masks. And I'm saying to myself, you would never know we have a COVID world because of it. So there are parts of this country where they feel like they're okay and they're not going to get this awful sickness. But I do also think that I'm encouraged by the number of vaccinations that have happened since this Delta has resumed. And I think you're starting to see it level off in terms of the numbers. So, we just have to watch it. It's such a.
I do think the FDA approval helped too. So we got that FDA approval. Hopefully we'll continue to get more, and that will give people more comfort that this wasn't, a flyby or drive-by kind of vaccine ramp up.
And they probably, I don't know if people feel, and PJ, maybe your wife can give us some education on this, but I don't know if the booster, if people feel like, okay, I'm going to get another one. I don't know if people feel frustrated because they feel like they have to get another one. We were told that we didn't have to get another one, or are they saying, oh, great, I'm going to be even more protected. So I do know that those that have already gotten the vaccine, they will get the booster, right? And just because that's what they should be doing. It's just trying to get those folks that don't want the vaccine to want to get the vaccine. So it's tough. It's really tough.
Yeah. So, well, we could be here all day talking about this, and I'm afraid we wouldn't come to any conclusions. But our time is almost up, so I'm going to ask if you have any final words for our audience, Stephanie. How would you wrap it up for us?
Well, thank you it's always a fun conversation, Holly. I know you and I can talk for hours on end, and I look forward to the next one we do where it's a little more quiet in the background and it's my office and we could do this for a longer period of time, but it's fun nevertheless. And I would simply just say there's so many headlines out there. I as you mentioned, I do TV as one of my jobs. I would say, turn the TV off. Turn it off, and don't tell my other employer that I just said that, but turn the TV off, because I think they spin the narrative very frequently. I don't want to say to scare people, but maybe just more on the negative side.
Yeah.
And so you could just take a deep breath. You stay safe. You have masks. You're just prudent in just trying to stay as healthy as you can. And at the same time, think about you have an economy that is growing above trend. You have pockets of inflation, I get it, but it's coming for reasons of better growth at this point. I think you have the Fed that has their finger on the pulse. They're not asleep at the wheel. They just believe that they have more time. Maybe they will be right. Maybe I will be totally wrong. But from an investment point of view, always look for professionals like yourself and like PJ. You guys are going to navigate your clients the very best way that you know how, and you've been doing it for a really long time. And so your exposure, your experience, your perspective is what matters. And I'm sure you're communicating quite well with your clients all the time. And I want to just say to your clients, they are in very good hands.
Well, thank you. We didn't pay for that endorsement
No,
to everyone who's
no, I truly
listening.
believe that. I truly believe that.
Thank you. And I mean, it's an honor always to have you here. We hope you'll come back, Stephanie, and thank you for your
Absolutely.
sage words of wisdom.
Thank you. Have a great weekend.
Thank you. Goodbye, everyone. Take care.